Good to see all of you this Monday morning. Thrilled to be hosting another coffee chat. Great to see many familiar faces. If you are new to our community, my name is Lindsay Lehr. I'm Managing Director of Payments and Commerce Market Intelligence. And we've been hosting these open meetings for several years now. The primary objective is to provide a space for mutual learning, for sharing trends, sharing best practices, and to help all of us continually stay on top of these trends that are shaping and changing our industry on a weekly basis. Primarily, we focus on Latin America. Today, though, we have a very interesting shift. We're going to be looking at North America, the US market, diving into FedNow, which is, I'm really excited for this conversation. We had a lot of questions about it in a couple of sessions ago, and I know it's relevant to many of us on the call today, so we're going to be diving deep into that. Today is definitely a day for questions, for conversation. We have two fantastic consultants, experts in the field that are going to help us understand FedNow and how it compares to PIX and other RTP schemes around the world. Okay, so we can move ahead. Just a couple of quick announcements and guidelines if you are new to our coffee chat series. Do keep in mind, if we can go ahead one slide, this is not a webinar, this is a meeting. Meaning that it is meant to be participatory. It is designed for you. It is designed as a platform for you to ask, for you to comment, and for you to participate. So a couple of ways you can do that. You can go ahead and jump right in, unmute your mic and jump into the conversation. If you're feeling a little bit more timid, you can raise your hand. You can put a comment in the chat. Feel free, however you feel comfortable to participate. And we want to hear both your questions and your own anecdotes and experiences or own analysis you want to add to the conversation. This call is being recorded. We do upload these to YouTube. And so this is an open meeting. So keep in mind that you can have competitors, you can have journalists, investors, you can have all different types of profiles in here. So just mind your comments like you would in any type of in-person event. Okay. Going ahead, as a final reminder, about 2 months ago, we launched our PCMI intelligence portal, which is still kind of in a beta format, only available to you guys. We haven't even launched this to our network yet, but I do want to make sure everyone in here has access. This is an online portal where we are housing all of our thought leadership, over 100 pieces of content since 2018, and all of our coffee chat content gets uploaded into this portal. So to access the slides, access the recordings and everything, historically, you want to make sure you're signing up and accessing this portal. So you have the QR code here, and we'll also paste that link right in the chat so you can access and get your account set up. It is free for now, so please sign up and be sure to take advantage. Okay. All right, so I'm so pleased. We're going to dive into our content to introduce both Marcia and Erin today. Very esteemed colleagues of mine. I've known both of them for many years, and I'm thrilled to have them here with us. Really, this is an area that's completely outside of my expertise, so I'm going to be learning right along with you guys. So Marcia, why don't you go ahead and say hello and introduce yourself?
Yeah, hi guys, I'm Marcia Klingensmith, and I've been kind of on these calls for quite some time. I really enjoy them. Lindsay, thank you so much for hosting these. I learned so much about what's going on in payments around the world in Latin America. So I'm the founder of FinTech Consulting. I have more than 15 years in the financial and payments industry, and I've worked at companies such as Bank of America, Wells Fargo, Visa, LexisNexis Risk Solutions, and most recently FIS Global, leading teams, building and delivering secure products and solutions. And currently, I'm working with financial institutions that want to harness instant payments to retain their customers and attract small businesses and streamline their lending processes for growth. So I'm excited to be here and sharing, my knowledge with you guys.
Marcia, thank you so much, and it's great to have you. You have been a follower of our coffee chats. I think since the very beginning. So great to have you. We also have Erin McCune, who I've worked with on and off multiple times over the years. And Erin is someone I really look up to and for her expertise and just experience. And Erin, go ahead and say hello and tell us a little bit about yourself.
Hello, good morning or afternoon, depending on where you are. It has been a great pleasure of mine to collaborate with Lindsay over the years on a variety of topics in payments. And this is actually one of my favorites. So I'm delighted to share some time with you and really looking forward to Marcia's comments and the questions and dialogue with all of you. So please don't be shy. I'm a payments geek and payments consultant, and I have operated at the intersection of corporate finance teams, treasury bankers, product folks at various payments providers around the globe, regulators, and decision makers at banks for several decades now, longer than I care to admit. And I'm particularly interested, as I suggested, on how businesses pay and get paid, although I work across all different use cases, with a particular emphasis actually on what card people refer to as account-to-account transactions. So RTP is right in my wheelhouse and something I've been paying attention to for several years. And we had a big milestone this summer here in the United States.
Absolutely. So on that note, let's dive right into that particular milestone. If we go ahead. So today we're going to be talking about FedNow, right? And to get us started, you guys who have been following us throughout the year, we've done a lot of work on PICs and other RTP schemes around the world. And just to remind us, this has been probably the top trend that we have been looking at PCMI in Latin America and around the world. And you can see kind of just the landscape, right? This is something that is taking place in almost every market in the world. These are just the leading established schemes that are already generating critical mass and significant volume. You have a whole bunch of variety here. You have central bank-led schemes like PICs. You have private schemes owned by bank conglomerates like Bizum in Spain. You've got some of these schemes that are already incorporating cross-border payments, regional conglomerates. So this is something that has just taken the world by storm. It's been around for decades, really, real-time bank transfers, but making it mobile ready, making it consumer ready, and easily adoptable and scalable is relatively new. So this is why we've been looking at it so carefully. And if we go ahead, you all know that PICs, of course, in our region is what has most impacted us. In Q1 of this year, PICs P2B or PICs purchases at merchants exceeded debit card volume. You can see that at the beginning of the year, PICs continues to increase while both credit and debit decrease in Q1 of this year. So every quarter, a BEX and the central bank, they come out with these numbers. So we're tracking this very closely and really trying to understand the impact that it's having, not only on P2P, but institutional use cases. And really for our community, the most interesting and important is understanding use at the POS, which this is kind of, this slide is meant to just showcase those changes that it's having already in Brazil. Okay, if we go ahead, around the world, UPI in India is another one of the leading, if not one of the leading, if not the leading RTP in the world. You can already see India, of course, is so different from Brazil, where card penetration isn't as entrenched. I grew up in this industry in Latin America thinking that Latin America was an underbanked region. You go elsewhere in the world, and you just see how that gets into context a little bit, where cards don't have the same level of penetration as they do in Brazil. So UPI has far exceeded cards in this market, and UPI is one of the pioneers in developing cross-border account-to-account payments. Okay. And then continuing to look at other, use cases and global schemes, RTPs or account. I love that term, Erin, account-to-account payments around the world. In e-commerce, in particular, is where it has had particular significance and penetration. You see Brazil, you see Thailand and India. We don't really necessarily on this part of the world, we don't hear that much about prompt pay in Thailand, but quite successful in certain use cases in certain areas. So of course, this is just causing massive disruption. There's so much to learn. There's so many questions, and the US is only now catching up, so to speak. So we're gonna, the US is so incredibly different than all of these markets that I've just referenced. We're gonna hear from our experts to learn about why and how and what we can expect from FedNow, how it compares to Zelle and Venmo, which are products that we've been using now for several years. And how this also, another question is how is this maybe going to impact Latin America or trade with Latin America? A lot of unanswered questions. So I will go ahead, and I think that's my last slide. I'm going to turn it over to Marcia to get us started, lay the landscape. And guys, again, Marcia has a lot of slides, going to chart through the content, but feel free to jump in at any time.
Yeah, and if you guys aren't linked with me, you can use the QR code to send me a LinkedIn invite. But so thank you, Lindsay. So we're going to be talking about instant payments in the US today. And you're most likely familiar with FedNow because it just launched July 20th, but we've actually had instant or real-time payments for 5 years now. We launched real-time payments with the Clearinghouse back in 2017. Both of the networks are very similar, and later on we'll talk a little bit about the differences between the two. So what I want to do in today's meeting is we want to just talk through the value prop that it brings, a little historic timeline, how the Clearinghouse and FedNow are, the real-time payments in FedNow are different, what the growth and usage looks like, roadmap, user experiences, use cases, adoption challenges, and the difference. We'll have a little discussion around the differences between FedNow and Pix and thoughts for the future, and then we have some resources at the end. And so I guess like the main thing to keep in mind, let's go down to the next one where it has the value prop here, right? So the value prop is that the railways, instant payments, it's on 24/7, 365 days a year. It's a push transaction. And we have certainty since the payments are irrevocable. So those are kind of like the value props that we got: speed, control, and certainty. So let's go. Yeah. So the history of, so faster payments has been around a while, like about 15 years. It's Venmo launched back in 2009. I was kind of checking on the dates for all these. Dwolla, which was one of the earlier players in instant payments, they launched their P2P wallet in 2010. I thought they came before Venmo, but apparently Venmo was first. And then Square launched, and then what we see is initial use cases were all around like the P2P transactions, but businesses was where you get a lot of the value around instant payments. And so all these players started adding business capabilities, but with business capabilities, there's a lot more complexity about how payments are managed. But now, so we have like the really late additions, and then right now we have FedNow that has just launched their capabilities. So I don't know if you want to add anything.
Just during this time frame, I would just call out that most of these are sort of facsimiles of and approximations of a real-time rail that create the illusion of real-time infrastructure, but actually ride on other payment rails, whether it's push to card or ACH in the background, in order to create the illusion of a real-time transaction. It wasn't until the Clearinghouse RTP went live in 2017 that we did indeed have a real-time rail equivalent to what we see in some of the other geographies. And that you all are familiar with in Latin America. And then, of course, now, just this summer, we have the Federal Reserve launching FedNow as a complement to the TCH real-time rail that has been live since 2017, which we anticipate will bring us to ubiquity, where every account, whether business or consumer, will have connectivity to the one or the other of the rails.
And before we move on,
can I ask a question, Marcia and Erin, just to, I don't know if it's a question or an observation, but you see like many entities right on this timeline, right? Mm-hmm. Almost all of which are private. Even the Federal Reserve, is it a government institution? Is it not? So in a lot of these in Brazil, right, it's very centralized, right? The central bank in combination with private players, but the central bank owns, manages, regulates this system. And in the US, we see just several public-private entities. And so I don't know if there's any comment you can make about why now, why, the role of the Fed right now, how that's working with the clearinghouse, which is, bank owned.
Yeah, I'll add some comments too, because one of the things that I realized I didn't call out is, if you noticed on 27, both Zelle and real-time payments were launched in the same year. And Zelle is basically the big banks got together and they said, we really need a faster way of doing payments. And they had been asking the Fed to build out a solution, build out a solution, build out a solution. And it's government, so it takes some time. And so these big banks came together and they created both the Zelle network and the real-time payment network. So they own both of them technically. And so there's a couple of impacts or ramifications there. Well, first of all, I guess we'll talk a little bit later about the differences. But Zelle is a whole user experience, like with a UI and with the back end, and like Erin was mentioning, it uses different methods of transferring payments behind the scenes. So it feels real time, but behind the scenes, it might use ACH, it might use credit card rails, it might use real-time payment rails. And then there's kind of risk exposure behind the scenes happening there. Whereas real-time payments and FedNow, they're like infrastructure. Like they're actually like a whole new design of the payment the way money moves. And then one of the things is, so the Federal Reserve is more of the people's rail, I guess, is what you might say, because the United States has about 4,000 banks and another almost 5,000 credit unions, so total of like 9,000 financial institutions. And only a handful are actually like the big banks participating or the originators of these networks and owning these networks. And so what you get is a lot of these smaller banks are kind of anti-clearinghouse, big bank solution. And they've slowly jumped on. Zelle's gotten a lot of traction, but as far as like the real-time payment rails or instant payment rails, what we've seen is a lot of banks have been doing this wait and see. Like we've had a lot of banks saying, I don't want to have anything to do with the clearinghouse. I only want to participate in FedNow. And so part of the delay is this kind of antipathy against
interesting
big banks.
Okay.
Yeah. And just to add some more color on that, in the United States, unlike in other geographies, our payment infrastructure, we have a tradition of having two operators. So we have two ACH schemes, one run by the clearinghouse, one run by the Federal Reserve. We have two wire or RTGS platforms, both one from TCH, one from the Federal Reserve, and they run in parallel. So in a sense, it sounds unusual, but from our perspective, this is actually the way payments work in the United States. It's very market driven, and we have both sort of public and private entities offering the core payment infrastructure in the United States. So the fact that we now have FedNow in conjunction with the TCH RTP platform is not unlike the way our other payment rails work.
Par for the course.
And I jump in and get a bit of
the exception. The other ones are interoperable, and then these two rails are going to have that interoperability.
We'll see. There was a comment from the audience. Go ahead.
Yeah, can I jump in and give a background information? I mean, the big banks in this country are resistant to doing anything ever unless they're forced into it kicking and screaming. And I understand why. They're in the business of security. That's their core business, and anything new is a risk to that. So the fact that they got behind some of these means that there was enough pressure for them to do so. either internally or from looking at the rest of the world and going, hang on a sec, we're falling behind. Now, the little
Yes.
banks, they don't really have a great deal of say because they don't run their own systems. That's all done by Fiserv, and I mean, they run most of it, and that's a couple of others as well. And I've talked to them years ago, and they said, look, we're not going to do anything. We're not going to offer a service to our customers unless the big banks are already doing it. So the little banks don't really have a great deal of say in any of this. But ironically, Wells Fargo, who I did work for a long time ago, one of many here, they actually now outsource everything. They're the only big bank, as far as I know, that don't do any of their processing anymore. Their core system, they outsourced it. So they don't have a great deal of say anymore either, because they can't do anything. So anyway, better background information.
Awesome. Cool, let's continue in our presentation here.
Yeah, so we were talking about like how instant payments and faster payments has evolved. So here are just some of the things that are a little bit different. So real-time payment and FedNow, they are both 24/7, 365 days a year. So this is kind of unusual for a lot of our payment mechanisms, which, you know, a lot of our payment methods are business hour primarily. And then these transactions happen in real time, supporting, you know, large volumes, quick processing, but they're individual. They're not batched processing like you see, like with ACH or wires or credit cards that get batched behind the scenes. They're designed to support a variety of use cases, and in fact, these are all like the P2P, the B2C, the G2C, like all the different interactions that you would expect, even internal to an organization. They can help streamline those experiences. Real-time payments has up to $1 million limit, and what you see with a lot of our current faster payments is the limit is really low because of the risk exposure. So like, I think I've seen maybe 2,500 on a Zelle transfer, maybe a little bit larger for businesses, but with real-time payments, it's designed for those commercial transactions. So it has up to $1 million limit. These are push payments. They happen like, so you have control over them rather than having your money pulled out of your account. The transfers are only, you were talking about cross-border earlier. Right now, there's the networks, the instant payment networks are US only. The money settles in real time. We also have additional data information, this rich data ISO 20022. It isn't necessarily used a whole lot today, but as use cases evolve, there'll be user experiences where this will really have a meaningful impact on how information is transmitted. That'll especially be helpful for like your B2B use cases or your government use cases, insurance, healthcare, when all this additional information about what payment is happening will be important. And then as we get into cross-border, since this is a global standard, that'll also become really important. And then these transactions are irrevocable. So like once a payment is made, you can ask for the money back, but it doesn't have to be honored. And like Erin was talking about earlier, a lot of these faster payments like the Zelles and the Venmos and PayPal, they feel like they move in real time, but the money doesn't settle in real time. So somebody's kind of left holding the bag. If the money isn't there when the money settles, like somebody's going to have to pay for it. So the risk exposure on doing a real-time payment is a lot lower than doing a faster payment transaction. And we talked about the different rails.
On that note, Marcia, there's a quick question from Gregory. How do you see FedNow or RTP impacting fraud and reconciliations? With push payments, is there more end user risk? I think this is a really interesting point that you're speaking to, the difference here. And Greg, feel free to jump on and give more context to your question if you want to.
Yeah, I mean, I guess I'll start and then Erin, you can chime in. But so there is obviously still risk exposure because this is push. Like one of the biggest areas, there's two kind of big areas of risk exposure. One is like account takeover. If somebody gets a hold of your account and is able to initiate that transaction, there's a risk exposure there. So making sure that your user experience is very secure with the multi-levels of control is really important. And then the other area of risk exposure is the whole social engineering aspect, right? Like, I think I'm sending money to Dean's Bakery, but in reality, I'm sending it to fake Frank, and somehow I've gotten the wrong payment information. It's a legitimate account, but it's not the person I think I'm sending it to. And so those are kind of like the two biggest areas of risk exposure.
Yeah, I would agree with that. And it's really a shift in the paradigm where rather than protecting the credentials and being concerned about whether or not there are funds behind the transaction, in this instance, it's a push transaction. We know there's money, but what we need to be confident of is that that someone who is affecting the transfer is indeed the person who belongs to that account. So that's the account takeover piece. And then whether or not there has been social engineering. And we've seen, because of the US being relatively late, we have benefited from the experience and observations from other geographies and been able to learn from those. And there's also been a fair amount of challenge with fraudulent Zelle usage. And so the banks have had a lot of firsthand experience addressing those concerns, and that better positions us moving forward with RTP on the one hand. But then on the other hand, I fear there's a halo of anxiety and suspicion that's sort of a carryover from the Zelle experience that may impact the uptake of RTP, TCH, RTP, and FedNow going forward. So that's one of the big open questions on sort of the stance and the way the industry will guide usage and safeguard confidence.
I think that's certainly a legitimate concern for banks.
Yeah.
For end users, yeah, certainly. When they launched with Zelle, there was huge amounts of fraud, and they kind of reduced that by a lot, but there's still a lot of exposure. I see a question in chat about e-commerce. So one of the things around e-commerce, so because instant payments is a bank to bank, like both entities participating in the network are banks. My understanding is there's sort of a hold on point of sale use cases. Like, banks aren't ready yet to engage in having instant payments as point of sale experiences. And part of that is a fraud concern. And I think maybe a less vocal concern is also, the interchange cannibalization. So I don't know if Erin, if you want to add anything to those.
I would just say that I think in markets where you're seeing a lot of e-commerce uptick, it's where there wasn't a readily used means of purchasing. It's either cash displacement, or as the commenter acknowledges, Pix drop filling a gap because debit cards were not enabled for card not present in Brazil. In the US, we have very mature e-com infrastructure, and not a lot of challenges, and both debit and credit are prevalent, and our debit, in many cases, our debit interchange is capped. So there's no challenge for US consumers buying online, and we have a pretty mature set of solutions available for those that want to fund with cash and use a digital instrument. So I don't anticipate that being a dominant use case. And we have some content to talk about use cases in a few slides.
Yeah. I mean, the merchants are very interested in that because it would reduce their interchange fees, but for all the reasons that mentioned, there's going to be, yeah, that would be an uphill battle.
Well, one of the things you have with PICS is that replacing debit cards don't provide a purchase guarantee.
Right.
And so PICS is easier, smooth, faster, and it's also not providing a purchase guarantee. So why not use PICS instead of debit cards? But credit cards provide that.
Yes.
The instant payments don't include a purchase guarantee, so you've got payment fraud becomes an issue. And I'm interested to know where we may be heading on that with these instant payment options.
As far as the kind of the guaranteeing the payment, I think that's still something that's under discussion. There are, like, on the faster payments councils, there's work groups that are kind of analyzing the impact and what that putting together recommendations for the industry. So because this is still nascent in the US, a lot of that stuff is still being built as we speak.
Yes, it's interesting. We all like trashing the payment, the card rails and interchange fees, but the reality is they actually do offer us a lot. They've been there for the last 70 years, and they do provide, and they've worked really well. And they also do provide purchase guarantees on credit card transactions. And so sometimes you need to look and say, well, how can we retain that, but actually have a better, smoother system at the same time?
And that's why as we're thinking about this at Bain, we've sort of developed a series of archetypes, and the US is likely to look a lot more like the UK or Australia, which are mature card markets, and less like Brazil and India and the PICS and UPI experience.
That makes a lot of sense. Let's continue here. I think the use case conversation is really something we should definitely cover.
Yeah, so the differences between, there's not a whole lot, there's more behind the scenes on how the payment transaction types are handled. So when we look at real-time payments, which has been around for 5 years, and FedNow, which has just launched, they're both 24/7 by 365. They both support the send use case, the ability to receive, it goes in the order of receive and then send and then request for pay. And then also the messaging, so that when you transact, you get an immediate confirmation. So you know your sender knows your recipient has the money in hand. It supports all the different use cases. There's a difference on limit. Real-time payments last year, they did incremental lifted the cap on the transaction limit. So it's up to $1 million, although banks will have control over what that limit actually looks like for their customers. So it's likely not going to be that, unless maybe for the big banks. FedNow, they have a 500,000 limit, but they're initiating, like when they first launch a bank, they're launching with 100K, and then they can ask to lift that to 500,000. The existing real-time payment network has 350 financial institutions on the network, so that represents about 65% of DDAs, and has about $29 billion flowing through it as of flowing through it in Q2 of this year. So every year that number goes up. FedNow just launched with 35 banks on network, although there was about 120 that were participating in the pilot. But some of the banks participating on the pilot didn't have the provider that could have them actually build out a working network. So it was kind of interesting there. One of the interesting things with FedNow is that the government actually participated in that launch with their own payment service. And like when we talk about adoption, so like PICS is a government mandated payment service, but this instant payments is not yet mandated here in the US. And so, but participation by the government in the network and dispersing funds through that is going to be an incentive to get banks to adopt instant payments. So differences, things like the transaction limits, where the banks keep their funds, there's like a joint account versus the Fed master account. they're both using ISO 20022 messaging, but like there's some differences about how they're leveraging some of those messaging fields. And of course, one thing to know is they're definitely not interoperable. Like Erin was mentioning how our current infrastructure with like ACH and wires, they're all like, you can send messages across them, but these two, they're not currently interoperable, and they don't yet have it on their roadmap to be interoperable. And so when you're talking about user experiences and bank penetration and stuff like that, like, you know, especially like if you're talking about a merchant experience, well, if you only have 350 banks on there, that makes it very awkward to have a payment experience when, you know, you have to figure out, well, which bank is this person participating in? Is the recipient on the same network? And so there has to be like a kind of a UI management of those experiences, and it just adds a lot of complexity to adoption and usage.
I think in the near term, we're going to see the largest banks connecting to both FedNow and TCH/RTP in order to affect that interoperability, and we'll see third parties come in, fintechs and processors to facilitate the routing of transactions depending on bank participation. And then I'd say in the shorter term, one of the things that happened with Zelle as it was being rolled out, and I keep thinking of that as the most analogous situation to the rise of real-time payments in the US. As banks had signaled that they would participate, but were not yet live, or if the destination account was with a bank that was not yet connected, the transaction would fall back to a push to card reverse debit transaction, meaning that the MasterCard and Visa rails that allows a push transaction to a 16-digit debit card number. And I think what we will see in the next few years, as the real-time infrastructure is slowly rolled out to more and more banks, will use ACH as the fallback. And there will have to be signaling to the end parties, the transaction, the sender and the receiver, that it will not be real time, but we will get the transaction to the destination.
Yeah, you know, that's a really
I anticipate that will happen in the meantime. And we can use same day ACH to affect those transactions. So at least it'll be the same day as opposed to tomorrow.
I think that's a really good call out. And there was two things that came to mind as you were talking, Erin. One is like, you know, with like, for example, you guys use Venmo or PayPal, and if you go and redeem your account, if the bank supports real-time payments, then you have that option to move money for a fee to the bank. So like, that's kind of an example of like, okay, the infrastructure isn't there for all the bank accounts to be supported. So we have rules that say, if this is available, then move the money. And then the other thing we're seeing, like with the APIs, like there's a number of the third-party providers that are building up this infrastructure. Like they're doing like this single API, and you can route via payment of choice. And so I think of what a lot of these third-party providers with these single APIs are doing are building in that kind of choice. Like the message they're telling banks right now is, hey, why don't you do digital transformation? If you're not ready, you know, to launch yet with instant payments, let's get this connector in place, and we can still send funds via, you know, your old ACH. And then as you're comfortable, or as you onboard these new capabilities, it's really easy to just flip a switch and then add on these additional rails. And also benefit, you get, you know, you've got this nimble cloud infrastructure, but you also can have like this centralized reporting platform where you can see all your payments through one UI. So these providers are stepping up, but the volume's not there, so they still need to get business. So they've got this kind of like, you know, migratory plan to help, you know, be relevant now, but also, you know, still make money.
It sounds like a bit of a patchwork kind of
Yeah.
modular system right now. So, and that's really interesting, very different from a lot of the markets we look at.
That's the big difference between a regulatory-led mandate and a market-driven evolution.
Yeah, absolutely. Something similar happens with open banking in the US, right? You have these
Yes.
different use cases
Yes.
that pop up and people
Yes.
find use in them, but it's very patchwork. Yeah, that's quite fascinating. So Tay has a great question going back to this question about merchants and interchange.
Mhm.
And I do sense increasing resistance from small businesses on paying credit card fees, and seeing surcharges here and there for
Mhm.
if you pay with a credit card. And so
Mhm.
do you guys believe that is FedNow or RTP a response to this? I mean, in the US, it's this ongoing decades-old battle between large merchants who want to push down fees and have some clout. To small businesses have zero clout, but maybe altogether,
Mhm.
they do. And if we're starting to see this resistance, how do you guys see this responding to interchange, and how do you see that playing out in the next few years?
I think they're independent and parallel, like this rise of surcharging, this renewed wave of regulatory discussion and exploration of interchange adjustments is also happening in parallel. And all of these things are going to play out in over the next 2 to 3 years. And I think this our atmosphere of the rewards and sort of points driven rationale for using your card, particularly for non-revolvers who are not reliant on that line of credit, is going to be imperiled by some of this.
Yeah.
The surcharges in particular are very interesting.
Right. And me as a consumer, even if I'm really married to my points and rewards, buying a coffee at a coffee shop doesn't really move the needle for me,
Right.
as an
Right.
example,
But a new
right?
refrigerator.
Lower ticket. Exactly.
Yeah.
That's not going to be replaced,
Yeah.
but maybe my daily purchases here and there.
Yeah.
Or at the nail salon, right? They always ask for cash. And if you don't have cash, okay, Venmo or Zelle. And then a credit card as a very last resort. So
yeah.
Can you guys speak to the fees, with the cost of this? What is the cost to the bank, the cost to the merchant accepting, a cost to the user? We haven't seen anything about fees or costs yet.
Actually, Marcia, go ahead and answer that, and then I'll chime in as necessary.
Yeah. So there's a very small, relatively small fee that's charged by the network. So they have like, I don't know if it's a monthly or an annual fee. So the networks charge like a small fee to participate. Then there's the networks also charge a small transactional fee. But because most banks don't connect directly to the network, most banks are going to work through a third-party service provider. So to the banks, through the service providers, there's going to be like an implementation cost, and then there'll be like the network cost plus the managed services cost associated with it. So that increases the price of the transaction. And then there might be some sort of flat fee, monthly fee cost, because like most banks and we have another slide that talks to this, but most banks, because of their risk aversion and the complexity of, so I think like in other markets, like send and receive get launched at the same time. But what we're in the US, the flow is first, the bank will start accepting payments through the network. And that's because there's not really a UI that needs to be built. There's not really a risk assessment that needs to be done, just kind of basic, what are these transactions coming in, and let me pull the data from the reporting. So it's a great time for them to learn about how the network works. So only about 5% of the existing 350 banks that are participating, so maybe like a dozen banks, are actually banks that have send capabilities. And so send has more risk associated. Anyway, that's different from the topic, but the reason why I'm bringing this out at this point is because there's still like a servicing maintenance cost that these banks have to, give to their providers for managing those experiences for just receiving the payment. So even though they're not making money on receive, there's a cost, which is still pretty nominal, but there's still a cost for them to implement and a monthly cost to maintain these inflows, and they're not making money on it. It's just a user experience, and setting a foundation for going forward.
The end user pricing remains pretty unclear. It's not ad valorem, so not a percentage, and it's more than ACH and less than a wire. But there's some really good comments in the chat that I want to acknowledge. And one is sort of getting to this question of what is the UI? So these infrastructures, whether
to
it's
that point,
let's
Sullivan, let's jump to slide 21, please, which we have a couple of examples, and then Erin, please continue.
Yeah, so these are sort of demos. The infrastructure that the Federal Reserve, FedNow, and TCH RTP have developed are behind the scenes infrastructures. So it's up to the participating banks or non-bank participants that are extending these capabilities on behalf of banks to build out the user experience and to embed it either in online banking, much the same way that Zelle was incorporated into online banking, or mobile banking, as it were. But then we're also going to see through APIs embedding the capabilities to affect these transfers into either business software or invoicing capabilities. You can imagine an SMB creating invoices in Intuit or whatever it is that they're using, or Bill.com, being able eventually to create a digital bill and then have the response come back. But that is as yet not happening.
Okay, so it's not, so FedNow, just for the FedNow's not a brand that consumers are gonna see and, hey, FedNow. No, it's not a, okay.
It's plumbing. It's plumbing.
It's plumbing. Okay.
Yeah.
And Sullivan, I think in the time that's remaining, let's jump to this use case question. If we could jump to slide 31, I think this highlights some of the key use cases, and then the trend, right? And this is fascinating, right? So Erin, do you want to give us an overview here?
Sure. This is our take based on a number of conversations with industry participants of where we see adoption, with the big caveat that this is not a market that has a mandate. This is not a big cash replacement play. We have a whole lot of robust payment capabilities that are mature in the US already. So we believe that the federal government will use the new rail. They've signaled as much. And so we see that as a short-term opportunity. And the use of the new rail, the instantaneous nature of it, and the relatively large transaction values are really great for intra-bank, intra-company transactions. And I would even extend this category to me-to-me type scenarios, or where you see an acquirer dispersing funds to a merchant who doesn't have their operating account at the acquirer's bank, if it's a bank acquirer. And we see a lot of PayPal was a big early user of TCH RTP for that use case. So I think that in sort of the first couple columns, the green, that's where we're going to see the most momentum initially. The medium and longer term use cases are really dependent on much more clarity around how do we address these transactions? How comfortable are we? Not just the transactions, but the request to pay ISO 20022 messages, and how are these going to be embedded, and how are we extending these capabilities into software that are used not just by merchants, but for all sorts of B2B and SME invoice type transactions. It will, as we've discussed, our point of sale infrastructure and sort of how payments are happening with merchants. There's so much going on in that space between potential regulation and the surcharges and all of the sort of risk mitigation layers and chargeback type capabilities that are still unknown. That's definitely further out. And for many reasons, the fact that we already have robust capabilities for bill payment and P2P means we don't see a lot of uptake for those in the short term. And we're missing some of the aliasing is going to be necessary to make that happen. And it's not like it's not happening today. And then finally, cross-border, we likely will see interoperability of the schemes. We see that in other geographies. It's just going to take some time.
Okay. This is fantastic. And I guess given this, Erin, and also Marcia, based on your perspective, what are the business opportunities with this? How is this going to change the competitive landscape? What are the, where are the new opportunities to make money or save money on this? How do you guys see companies converging around this technology?
Should I go first?
Go ahead.
My theory is more around kind of like both like maybe lending and supply chain. When I talk to banks, most banks don't think that they have a payment need. Like they're meeting their customers, same day ACH, wire, Zelle, like they feel like they've got it covered. Banks make money through lending. And so in order to get a real adoption, you're going to need to think about how they think about things. And so I'm envisioning like the lending process has a lot of friction in it where, getting that money to the people, like say, take the example of construction industry, right? Like when you're building a home, you have the builder that's getting a loan, and then they have all these subcontractors that are you kind of not necessarily getting paid right away. So it's like somebody can come in, inspect the lot, say, okay, yeah, you did what you deliver here, and let's give you an instant payment to the contractor. The contractor then goes and pays his subcontractors, and everybody's made good same day. So those kind of things, or supply chain where you have these complex payment transactions that are happening between the vendor and supplier. Like they have all these. There's a lot of data that can be associated with these payments through the ISO 20022 messaging. And so like when you're trying to reconcile an invoice to the payment, like you can put a lot of those details. Oops, this didn't make it here. Or, oh, we had this canceled order, or this, there was an error here. And so you can put some of those details and the invoice information, you can put all these details that can help automate some of that marrying up of the payments to the invoice data. So I see it a lot more on these B2B use cases where we have a lot of friction today.
Mm-hmm. I would amplify that perspective, but I would also provide a caution in that those billing and AR and AP and disbursement workflows are not at the center of a bank's relationship with merchants or businesses. There are software providers that are much closer. So I believe the opportunity is around embedded finance and embedded integrated payments, and banks need to orient themselves toward distribution through software players in order to retain primacy of their relationship with businesses. Okay. And then use the new transaction capabilities embedded into digital banking as a way to provide additional hooks or tools, or to be perfectly honest, it's a defensive play on the consumer side to remain relevant and stay abreast of the non-bank.
I was going to say on that relevancy thing because I have another theory there. Okay, this is all my own perspective, guys. So I don't know that there's
That's what we're here for. So,
but because what we're seeing with like the Venmos and the PayPals and well, so actually the gig economy, right? 36% of the U.S. adults participate in the gig economy, and one of the reasons is because a lot of Americans are living paycheck to paycheck. And instant payments helps them manage their cash flow. They want to get paid for those gig economy jobs in real time so they can manage their cash flows and their expenses and make sure they're paying all their bills and have enough money to do that. And so my theory is with a lot of these banks that aren't participating in the network, if somebody's working at one of these gig jobs and are getting paid through instant payments, like they might not leave their bank immediately, but there's a good chance that they're probably opening up an account in an institution that does accept payments. And that these banks are probably having a slow bleed of customers by these people who are needing to get payments as quickly as they can. So that's my theory.
Yeah, the good thing about B2B.
I know.
All right. The good thing about B2B is that you don't have to worry about, can you trust the other party? You're already in a business relationship. So you don't need to worry about fraud or anything like that. So this is perfect for B2B.
However, those are all scheduled transactions and there isn't a lot of urgency.
Yeah, the data provides a lot more value. The other place that there's good value is like within the organization to streamline the processes between their different business units. Because there can be a lot of friction trying to get money to pay bills in another department, especially if that other department has a bank someplace else. So that's again like an account for me use case, which I think you were saying like right up on the short term.
Yeah.
But,
Lindsay, go ahead.
We'll probably have to schedule. Yeah, we'll probably have to schedule you ladies back in 6 months to see the evolution of this and see the growth. And
that would be
I really appreciate. Yes, thank you so much for your insight. There's so much to learn here. We only scratched the surface, but I really learned a lot, and really thank you for your guys' expertise. Let's jump right to slide 36, Sullivan. Just a reminder, our next coffee chat, we're going to continue the discussion on RTPs, looking at Mexico in particular. Really interesting market, a lot of kind of up and coming things brewing in Mexico. So make sure to join us on September 18th for that. And again, Erin and Marcia are available for follow-up questions and to connect with them directly. So thank you all for your participation as always. Ladies, thank you so much for being with us. Everyone have a great rest of your week, and we'll be in touch soon.